It's in your head, it's in your head, zombie, zombie, zombie. Hey, hey. Amazon looking at the Amazonian because thinking about selling some puts because it's down $2.53, 2.42%. We like Amazon because I told you, I don't know, almost every day, probably every other day. Old Sparkle Barbie, old lady spends a lot, probably dialing up the old Amazon app on her phone. Beep, boop, boop. Here's what I need. Zoop. Then it shows up at the door. Amazon, pretty strong company. Could we make a 30-day play? And then how would that math look? Let's look at what's happening in the chart. Let's pull up the Amazon chart over at the Yahoo Finance. One day, sweet Jesus, 101.42, 101.40. So we could get in on the Amazon. And what I was looking at, so here we are, Amazon sell put. We got the sell and the put clicked on the Robinhood 30 days out. So basically 1 month. Cinco de Mayo, mucho cerveza, por favor. 30 days out, all the way down. I was looking all the way downtown to Chinatown to this 86, an $86 strike price. We can put 91 cents in our pocket. So if we looked at that, what would the math be if we went 10 contracts? How about 92 cents? What do you think about that? So if we coughed up, how much would we have to cough up? We'd have to cough up $86,000. And we're looking at a 30-day trade. So theoretically, we can do this how often? Yep, once a month. So if we had $920 and we divided it by 86,000, we would be at 1% for 30 days. And then we would multiply that by, I think there's 12 months in a year, right, Bart? Yep, that's correct. 12 months in a year. So it'd be a 12.8% return, fairly conservative considering we'd be way down here in the 86% chance of profit range. Would you own Amazon at 86? I think I would. You probably would as well. The chance of it going from 101.43 down to 86, I don't know. It says that it's only a 14 to 15% chance of doing so. So we might be able to put just all of the $920 in premium in our pocket or close it out early once we get to that 50+% mark, depending on how quickly that comes to us. But if you were to collect 12.8% dividend yield on Amazon, you'd be like, ooh, right here, Mr. Kata, right here. You'd be all over that. So that's kind of the philosophy for the Amazon. If we get stuck, if we get put, if we get assigned these shares at $86, we would probably take them. We'd say, okay, we'll do that. And then we would immediately spin the wheel of fortune and sell some calls. So let's see if we can get filled right here on the Amazon 30 days out, cash secured, puts 10 contracts at an $86 strike price. And there they are. So those were immediately sold because there's a lot of action at all times on Amazon. Stocks like Tesla, Amazon, Apple, Google, Meta, Microsoft, they have a lot of action every single day, meaning there's people on both sides of that trade ready to go at any time. I'm ready to go. You just tell me what you want. Tell me what you want, what you really, really want. We could have even asked for probably another penny and got $930 by the end of the day, but I wanted to fill it right here and right now. You know that. So let's look at a few things, see where we're at. SPY trading at 406.83. So we could have theoretically put on either side of those trades what we were looking at earlier today on the call side and on the put side on the credit spreads, and we'd still be safe on both with just over 2 hours to go. So here in the Central Standard Time, the market closes at 3. So we've got 3 hours and 8 minutes to go. I was looking at possibly T. Rowe Price again because it is down even lower today than it was yesterday. Of course, it was flirting into the 108s. There was 108.99. And I wasn't prepared to pull the trigger at that moment because, well, I wasn't in front of the computer, but I am now. It's at 109.13. Why isn't it moving? Let's refresh. and see if it changes here for us. Up or down? Up or down, you're turning me inside out. 109.13. What's it going to do next? Is it going up or down? T. Rowe Price, pretty good company. They've got a great balance sheet, a lot of cash on hand. We like that. Our friends over here on the seekingalpha.com, what do they say? They say, the analysts say it's a buy. Wall Street and the propeller heads say it's a hold. Growth is an F, but they have a C minus valuation, A profitability. We like that one. Momentum, that's not bad. B minus. Revisions, of course, would be what their forward looking outlook is on this economy and their business model. It's a C minus, but a lot of the companies are going to see that going forward for 2023 until we get this whole inflation and interest rate situation figured out. So we'll be looking at that. Okay, it's at 109.32. What else were we looking at? Our friend Blackstone, it was in the 70s again, and I should have pulled the trigger on some more puts, but I did not. So since that time, if you look down here, 79.95, even down here, even lower, 79.67, 79.46, and now currently at the $80.63. Plus, we've got a decent amount of exposure to Blackstone right now, so we might let that go. In fact, I traded some puts, sold some puts in my Vanguard account today on the Blackstone, sold some calls on Devon Energy, sold some calls on AbbVie, also sold some puts on T. Rowe Price. So that's what I believe in those positions, even doing that into my retirement account over there on the Vanguard. So right here and right now, we'll probably do nothing on Blackstone unless it makes another dip, maybe dip down low. Because the news on Blackstone is that they reached their withdrawal limits again for the fourth consecutive months, which for a headline basically says that, the investors, they're no longer confident with Blackstone and they're trying to get their money out, which is bogus. It's just, some people are trying to hedge their exposure to different assets. Plus, with the treasury notes that as high as they are in the percentage rates, those are super safe investments, that you can be raking 4% in on your money with next to no risk. So people are balancing out their portfolios in those regards, as well as gold will tell you. So what's gold doing today, just in general? Actually, that's the Barrick Gold Corporation, but gold in general is up today again at like maybe near all-time highs. So we have that going for us. What else were we going to look at? Let's go back to here. I wanted to go through some of these, what we have on the board already, because they all look bad, but they're really not. Okay, so for instance, started at the top, the only thing we have expiring this week right now still is this Citigroup call. And I was actually looking for it to be called away, but then Citigroup took another downtown to Chinatown turn on us. And the 47 call is safe. We could probably just roll that now if we wanted to, because it only has between $1 and $2 left in that trade. And we collected $43 when we did it. If we rolled it right now, what would we get? Even if we just rolled it out 1 week, if you rolled it out 1 week at the same strike, $47, you'd put $56 roughly into your pocket. So let's go ahead and see what's up with that. Let's go with 56, and we'll just saying low likelihood. You crazy. Man, you crazy. I have to go to 55. Let's just put 56 on the board and see if that fills. And it's just rolling out 1 week, another $56 into the pocket. Covered call roll. Doesn't look like Citi is going to cover that this week. It's still early in the week. And you know what? I might even look to selling some more puts on Citigroup. I like Citigroup long term. Still being beat down on still being beat down because of the financials, because of the banks, all that good stuff going on. And so next, so it's on the pending board, not filled yet. We got the Bank of America puts expiring next Friday, 27.50, and Bank of America is currently at 27.65. So those are catching some pressure, but you know what? We'd be fine owning Bank of America at 27.50 because my current position is what? Yeah, see, my current position on the 1,000 shares that I own are at 33.90. So that would bring my average cost down on a company that we're completely fine with at this point. Pays a dividend, has a nice balance sheet. Warren Buffett likes them. We like Warren Buffett. These $78 puts on Blackstone, of course, are under pressure because Blackstone is downtown. Coterra calls, they're in the negative because Coterra is currently trading at 25.17. So it could come up through our strike price and those are called away. I'm fine with it. I'd let all of Coterra go now. Let's see what we're at. We got an average cost of $24.76 on our 800 shares. And our positions are $25.50, one contract, $26, two contracts, and $25.50, three contracts. And here's our expiration dates, April 14th, and then these two are April 21st. We would let them all go because we're looking to spin the wheel of fortune on the Coterra. So you could see what happened here when oil spiked. Coterra just said, okay, $24.50. How about $25.25? So if those get called away, we're fine, but that's why they're showing negatives in this column here. Same with the Google, Google 98 calls, it looks like we're losing a lot of money, but we're not because our position on Google is what? Is it 94 something? So Google's currently trading at 104.54. We could roll these again, and we might consider that because we still have a week and a half to go before expiration. But our position is even lower, 92.47. So at 92.47, if two of our contracts, 200 of our 300 shares are called away at $98, we still make that difference and of course keep all that premium that we've sold along the way as well. Then we can wait for another dip. If there is one, you never know, there may not be, but you could wait for another dip on the Googler and then re-enter and begin to sell puts in the meantime on red days because we did roll both of these. This one has now rolled to $100, and that's May 19th. And we collected a decent amount of premium when we rolled that, didn't we? Yeah, we collected $330, and that was just on the roll, not to mention the original positions as well. So we could let those go. Same with this, it's showing we're down $88 on this Coca-Cola call, but we'll let that go at $62, even though Coke is at $62.88 because we got our dividend and our average cost is $59.58 on our 200 shares, and we've got options positions of $62 and $63, and they're in consecutive weeks, 4/14 expiration and 4/21. So we'll let them both go. If it happens, and then we'll just wait for another dip on Coca-Cola, sell some puts, and roll that and spin that wheel again. So just an update, checking in, trying to get our covered call covered there. We're just going to leave it on the board, and then I'll check back on that before the day ends to see what we need to do, if anything. But real quick, let's just check another Citigroup put position just to see what kind of action we can get at the 1% eyeball test. Come on, Farm Field Internets. We've had a couple storms going on the last couple of days, and as I've told you before, my satellite dish for my internet is literally up a tree, attached to a tree on the farm field here in Valparaiso. So we're down almost 1% on Citi, okay, 45.67. A few months ago, I was entering Citi. I'll never forget. It was 44.05, and I thought that was a great price. And then it went up to over $50, and then I was mad when they were called away at like 47.50. So now I have another chance. Now the risk is the banks, they're taking heat, so that's the risk. So if you went out 30 days on these puts to May 5th, what kind of action can we get? That's a call. Let's go to a put. What kind of action can we get? And again, we're looking at that eyeball test. So how close can we get to a strike price to a credit that's almost even? We can go all the way down here to the $40 strike, and you'd collect over 1% at 46 cents per. So we could consider putting that on right now, but I'm going to think about it a minute because I am currently starving and I need to get some fuel so I can think clearly. So we might revisit this trade before the day even ends. And how is the day looking currently? Whoa, look at that. So we got SPY up to 47.30. So if we would have put on those put credit spreads, we'd be sitting pretty right now. And I'd be under pressure because I was looking at the 409 even for just a second, considering the 408 just because that was like the only action, but I was too nervous to put it on. And now I'm happy I didn't put it on because I'd be shaking in my boots and biting my nails right now as SPY pressures that 408 number. And then, of course, Robinhood would say, uh-oh, that seems risky. I'm going to go ahead and try to close that for you. No, you only close what I tell you to close. And they're like, no, we got the robots working here and we'll close what we want. So there we have it. S&P 500 down 0.32%, Dow Jones up 0.24%, NASDAQ taking it on the chin down 1.16%, and the Russell still down again. They've been on a rolling downhill, and you know what rolls downhill. So I'll see you in the next video. Thanks for tuning in.